Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Analyzing Potential Market Opportunities in the Nadex Markets. So very excited to be back with you guys. Definitely, I cannot believe that we're already talking about August 25th, right? It's just absolutely crazy that we have, it's like this month has just flown by, right? A lot of stuff going on in the markets, a lot of speeches this week. So this morning started off kind of interestingly, right? We had a consumer confidence number that was much less than expected, which again can really lead to some craziness in the markets, as you guys know. So so we're going to dive into things pretty quick today. Also want to point out a very important event that's happening in the next 7 days. It's my birthday, so you know I like large. No, just kidding. But yes, my birthday is August 30th, guys. So yeah, I'm in that like kind of crash course. I decided today that I'm going to be either 30 or 35. I'm not exactly sure which one I've picked yet, but I'm going backwards. I figure there's no point in going forward here. I like 30, 35 better, and I haven't cracked the 45 number yet, but I'm starting to get close. So with that, let's jump into today's presentation, guys. For those of you that don't know me, many of you at this point I know are regulars. You hear this week in and week out, but I know we get some new faces in here every week. So when I'm looking at charts, I try to keep things as simple as possible. I've been trading since basically the tech bubble, right? The late 2000s or the early 2000s, late 1990, like 99-ish time frame. Started with traditional options and stocks, found Forex, found futures, ended up going and becoming a financial advisor because I wanted to kind of advance my skills as a trader. And I figured I've seen everything from the outside, let me see everything from the inside. And it wasn't necessarily what I imagined it would be, right? So what I did was I left that industry and I kind of came back out again and started teaching. And I've created a number of different courses. I'm definitely I love creating new strategies and really testing things and figuring out how to make them better and then matching them up to people's personalities because, as you know, everybody's different. And so again, created a number of different programs, 30-minute trader for people that have jobs, 5-minute binary courses, high volatility trading courses, a lot of stuff, a lot of stuff out there in the markets. But I've been doing these presentations, and my goal of doing these, partnering with Nadex is I'm really trying to give you guys a golden nugget each week. Some type of aha moment, or I didn't look at that before. Many of you are now using a strategy called the Harry Potter strategy that I've kind of just named it that. That is something that has only been kind of talked about and given out inside of these webinars. It's not something that my regular students can buy classes on. It's something I purely have done with Nadex here. Although I do use it in all asset classes, but it kind of got its nickname from these presentations. So with that said, let's go into the disclaimer so I can talk about charts and risk management and things like that. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost of another transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, Nadex is a registered trademark of the IG Group. So, here's what we're covering today. Whoops, already jumping ahead. We're going to cover upcoming news events. As I mentioned, we had that consumer confidence number today. For those of you that know me or have attended these presentations, you know I absolutely love news trading, right? Hopefully at this point, many of you have also gotten the news trading bug, right? One of the reasons I love it the most is because it provides catalyst for the market to move, right? There's always a forecast and then an actual. When the forecast is different than the actual, we get movement. I guess actually when the actual is different than the forecast, we get a lot of movement and typically in a short period of time. And I absolutely love that because it's telling me when is the most important time to look at the computer, right? I don't need to sit here for 16 hours a day. So I love that about news, okay? Now, we're going to do that. Then we're going to cover and break down the indices, okay? Late last week, I was telling all my guys, I'm like, listen, unless we get something that is just earth-shatteringly bad, there's absolutely no reason why these things aren't going to go higher, and Q is going to be hitting all-time highs. S&P will probably get up there as well, right? With everything that we have to make the economy, or actually, I guess I can't say the economy, but everything that we have out there to make the markets better right now is only going to drive us forward. Everything that were like the last couple pieces were missing, and things like stimulus will only continue to drive it higher. So the indices are very interesting to trade right now. There are obviously short opportunities out there, but again, we're using kind of Harry Potter's and a couple of different strategies to be able to take this long. All right. Then we're going to cover Forex. Now, Forex, the last couple days have had some really amazing trade setups. I wouldn't say anything like crazy in one direction, right? Like I'll show you the scanner in a second. Um, One thing that I was mentioning, I guess, what was it? Was it yesterday? I guess talking about how the pound has had a lot of consolidation, and it was getting down to that kind of 90 pips in one day is what the average was kind of falling into. But, and I said, this is what happens. We get these like low, 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 low. It cracks 90 ATR, and then all of a sudden it rips off like 150 pip day. Well, guess what? Right now it's at 141 pip change in the last 24 hours. So, I mean, again, it's becoming like clockwork. Last but not least, we will cover commodities. We cover gold, because again, we know what gold's doing. You guys know what my opinion on gold is. Silver, which again, I have even a sharper, kind of opinion on silver. And then we have oil. And oil, very interesting setups off of what we talked about last week. We gave you guys an upper and a lower range, and there was, I think, 2 different trades that triggered and went to profit on the top side. And we finally broke through that level. Of course, it pulled back today. Okay. And again, that consumer confidence number was probably not helping that. So we'll break down all those 3 things. So let's go across and let me drag a window in for you guys so we can get the news out of the way. So scanner wise, again, first things first, here is that pound yen number I was talking about, right? 141 pips in 24 hours, right? And even the pound dollar is up 72. And that's really kind of the biggest mover, right? Looking at this morning's news, though, this is the big one, right? This consumer confidence, right? It's not marked as a red, but consumer confidence is always important, because when the consumer is not comfortable with where the economy is, it tends to spend less money, right? If you think about it, hey, listen, we're going to go into a recession. Maybe I should, maybe I should not buy this. Maybe my disposable income, maybe I should save it a little bit more. And that's what we're kind of seeing right here. This is, is expected to go up at 93. 84 is quite a miss, right? That's quite a miss. So that's going to be kind of messing with the markets. There's no other way about it. That's going to mess with the markets. The rest of today, really not much. We have a BOC member speaking. He's not one of the big names out there. And then tonight we have some construction work done for the Aussie. You guys know I love these 9:30 p.m. Aussie trades. This is one. It can provide a little bit of movement, but it's not one of the big 5, right? Now tomorrow we have durable goods, and this is also kind of carries over from the consumer confidence. So there are core and there are durable. Understand, these are both expected to be less. So even if these come in slightly above, right? Say core durable comes in at 2.3. Well, that's technically great, right? That means people are buying more things. There's more orders coming in, but here's the but. 2.2 would be less than 3.6. So the media is going to jump all over that and say, oh, core durable goods orders are lower than they were last time. Gloom and doom, the economy is going to, we're dying, right? That's typically how this one gets played. Even this one, 4.4. If this comes in at like 6, you're like, woo, we made, 2% more orders. That's awesome, right? That was 2% more growth in orders. But it was less than 7.6. So the media can turn this negative and say, hey, it was less than it was before gloom and doom was coming. Even though it was better than expected and the market needs to adjust. So that's what we have going on tomorrow morning. Now, this private capital expenditures can move the market for Aussie as well as we have crude oil, everybody's favorite commodity out there. Last week, and if you guys remember, we were calling for this to say, hey, listen, we've been way too big on the one side. It would be very interesting to see what happens if we have a flip on the other side, right? And we did have a flip on the other side last week, and we had finally a red number printed. So this week, it's supposed to come in at minus 3.4. million barrels. Oil's a bit up today, right? We're up into that 43.30 range. We finally, after 5-6 hits, finally broke through that upper level, that area of supply that we had talked about. Finally pushed up, and the question is this going to rally up just to create a big disappointment tomorrow in oil inventories? And that could definitely happen. We'll cover that inside the oil charts. Going into Thursday, again, we have preliminary GDP, and again, this number is just astronomical, minus 32.5%. It is quarter over quarter, so it's kind of one of those numbers that I take it with a grain of salt right now because, again, when we have month over month numbers, that's going to have its finger on the pulse much more about what the GDP is doing and COVID and everything else. I mean, quarter over quarter, you go back one quarter from where we are now, we were in the thick, the thick of everything, right? I mean, that's kind of like, the rock bottom of where COVID numbers and the fear and everything is such. So, of course, it's lower. I mean, of course, it's lower, right? And then we have unemployment claims. And look at this. They are having it come in at 1 million, which means they don't know. It means they're taking an educated guess because it was 1.106 last time. And they're saying we're going to hit exactly at 1 million unemployment claims. Exactly. Yeah, they're just guesstimating at this point. So we'll see. Tomorrow morning, though, Thursday morning, the big news is going to be Powell speaking at 9:10. Again, there are certain catalysts in the market, or certain people in the market that definitely have a lot of power. And one of those is Powell, okay? Being that this is early morning, again, right before the U.S. Open, this is probably going to dictate where the markets move that day. It's a pretty important time. The unemployment claims number may have a little bit of movement, but again, you guys know 9:30 in the morning is when retail traders step into the market, and this guy's speaking at 9:10. So all eyes will probably be to hear what Powell has to say. 10 o'clock, we have pending home sales. 11:15, we have BOC. Now, Mecklin, he can actually move the market for the CAD. So again, for you currency traders out there, dollar CAD or even CAD yen are plays that you'd be interested. But Thursday is also day one of the Jackson Hole Symposium. Okay, so Thursday, Friday, they're going to get a little bit weird this week. And the reason why is Jackson Hole is one of those things that we will get certain headlines and releases from their participants, like statements. They tend to be a little bit unpredictable, okay? Because it's not like, hey, you know what, at 11 o'clock, so-and-so is going to come out and he's going to tell us what they just talked about. It's kind of one of those things that's a little bit unpredictable, but again, can provide great movement going into the weekend. On Friday, interestingly enough, we finally have a Swiss number. And we don't really see Swiss numbers too much, but it's an economic barometer. So, dollar Swiss has been doing pretty well. Again, the Swiss really drove that one down because of the barb shot back and forth between the U.S. and China over trade and TikTok and a lot of other kind of things back and forth, right? I think the owners at TikTok now are I mean, it's funny. The owners, I say the owners, but it's basically the Chinese government is suing the U.S. government because of TikTok. Not that many other companies and corporations have already said, no, our employees are not allowed to use TikTok because of security concerns, but now they want to sue the U.S. government, which I think is pretty funny. But every time there's any type of barbs between the U.S. and China sent back and forth, the Swiss tends to get a little bit more powerful, okay? Getting an economic barometer, and again, it's supposed to be a little bit higher than before. This could actually give us a nice little setup inside of the dollar Swiss later on this week and Friday morning, like super early, right? Then we have CAD GDP, and again, expected to be pretty good. Personal spending numbers. Then we have Governor Bailey speaking for the pound, again, probably a bit more. And again, if Governor Bailey mentions the B word, you know what I mean by the B word, right? Brexit. He mentions the B word, there will be some crazy movement probably in the pound dollar. Again, great little, when he speaks, especially in the U.S. time frame, right, where we're actually awake versus like a 3 o'clock in the morning reading, when he talks, we can have some movement, especially in, again, pound dollar as well as pound yen. Those are two nice setups. We can get some big movement. Then PMI, University of Michigan, consumer sentiment as well, revised number, and then again, Jackson Hole. Most of the statements or comments from Jackson Hole will come here. Okay, will come here, all right, on Friday, especially Friday afternoon, because it's kind of, wrapping things up and getting the information out here. Now, one thing I'm going to do is I'm going to actually kind of cheat a little bit and go into next week because I want you guys to see two things that we have occurring next week. We are actually not meeting next week. We're actually pushing it back 2 weeks from now. But next week, this Sunday night on August 30th on my birthday, this manufacturing number for China is kind of a big deal. Okay, I don't know how many of you out there have tried to do trades on Sunday night. Manufacturing data from China, who's kind of like a step ahead in recovery. It'll be very interesting to see what's happening there because again, this number could absolutely crush the Aussie, the New Zealand. Kind of seeing where demand is, it's kind of it's very interesting, right? And then next week, there's a couple big things as well. Again, I don't have all of them in here, but next week, guys, as well, I'll just cover them real fast. Monday, really not much, the monetary policy notes. Next Tuesday, this GDP number, quarter over quarter, and ISM manufacturing number are both big data points, right? So again, next Tuesday on the 1st, ISM and GDP are important. On Wednesday, again, crude oil is probably the biggest thing, as well as the non-farm employment change number, right? It's the first Wednesday in the month. Thursday, we have unemployment claims and this ISM non-manufacturing number, also a big data point. And then next Friday, September 4th, huge, huge. That's where our unemployment rate comes in. It hasn't given us a forecast yet. Our non-farm, basically our regular non-farm number, our average earnings, and then Canada has some big numbers as well, right? Especially the unemployment. So next week is actually, again, we won't be meeting, but there's a lot of big red news. If you're not familiar with how to get to these things, again, use Forex Factory. Just go up here and use the drop down and make sure you click the biggest numbers, or go across and go to Daily Effects and go to their economic calendar and do the same thing. Filter it for high release, high impact news. It'll be these red ones, and you will get the entire printout for the week. Make sure you guys don't miss out on them, because next week is a big news trading week. Okay. All right. So let's go over and start talking about the indices. Let me pop this up. Let's go across and go over to NQ. All right. So NQ, we actually a little bit, just an hour ago, we ended up having a short trade here. So as I mentioned last week, so the NQ, so we were sitting, let's see, last week, honestly, the time is flying so much, the 18th. So we are sitting here right now, okay? The 18th at 12, let's see, let's go back to the 18th. Actually, let me pull this on an hourly. Let's see, the 18th, we're sitting right up in this area here and talking about finding new levels. So I guess this kind of push-off point was, it came up. But anyway, here was where we were last week. We had this topping area, and as you can see, price came back up, stabilized in that same area, and there was a bounce trade that happened on the 21st. So 21st was last Friday, and that's what kind of initiated all this kind of movement forward. So where we are right now, as you can see, this is kind of how we need to trade the NQ, being at all-time highs. The one thing, especially the way that I trade, you guys know that I am a supply and demand trader. I need to see, I just can't, I don't have a crystal ball. Like, I can't say, hey, listen, this much percent above where we are, there's going to be a magical turning point. I want proof that there have been buyers or sellers in an area. And that's what we had. Price had rallied back up here and been slammed down again, which kind of set us up for these shorts. Now, again, you can see price hit here, hit again, and kind of pushed all the way back down again. And we just went right back into that same level and have also started to push down. So right now, there's a couple ways we can play the NQ. And again, remember, my numbers for the NQ are off. I'm doing this all on one platform. So it's ECN-based data. It's a little bit off. So you guys would have to get your exact numbers. But approximately this 11,686 area is an area where sellers have stepped in. Now, it's hit a few times, but it's an important level to kind of watch out for, right? Now, opposing zone, again, we've seen price get turned around with kind of this level, but profit targets in this will probably have to be around 11,557. And again, this is kind of forming this kind of sideways channel, right? Now, do I believe that the NQ can go higher? I absolutely think it can. I mean, there's a number of different statements that people could make. There could be talk about increased stimulus or making stimulus whole, or paying back things. A lot of things out there that could really make the NQ jump again. And the question is, how do you play it, right? How do we know when to get long? Like, where's the bottom? Well, I mean, 11,580, 11,557 is a good one. As we, again, we have this short position down here, but again, we're starting to get farther and farther away from it. So I'm going to remove it just to kind of keep our charts clean. But what I'm going to do is I'm going to grab it and bring it over here now, okay? And again, it's still valid to the downside, but we're waiting for price to get back there. So what I'm looking for right now is actually a break of the last high. And again, yes, I'm asking for a break above and then a collapse, which people are like, wait, what are you talking about? Why would you want that? Well, here's why, okay? I'm looking for a break of this zone. And again, make sure you get your own numbers. It's approximately around 11,722. I want to see a break above that, because everybody knows the second it goes above that, what does everybody in the world feel is going to happen, right? Oh, I need to buy, breaking time, all-time highs. Well, the second you break, what's going to happen is most likely it's going to pull back to stop out all those people that know once we hit an all-time high that they need to buy it, right? So what we're looking for is we're looking for a Harry Potter to the top side. We're looking for a break out the top, a retest back down at that 11,722-ish range, and then we're looking for a punch higher, and we're looking for approximate targets, probably up here at 11,824-ish. Remember, ish. Make sure you set up your 1 to 3 risk of reward tool, and go ahead and kind of look for those targets. And again, this is us kind of playing against the retail trader, playing their kind of breakout support and resistance trap is really what we're looking for. Again, we're already in, we would already technically be in this one short. So it's not, again, I don't want you guys to jump in this one since we're already short here. But again, if we do come down and break down, there is that other zone a bit lower as well. So that's kind of what my thinking is for the rest of the week with NQ. I do think it will continue to push higher. Again, the economy is basically being supported. We hear any type of good news about recovery and this and this and this and this. That affects more of the economy, not the overall stock market, but people think they're the same. So any positive news anywhere will help push this even further higher. Okay. Now the S&P. The S&P is kind of set up in a similar situation. Not as clean, right? But this is kind of what we're looking at. Again, we had that failure to go higher. Here was the actual short entry on this one. Right here, it would not have been green. You guys know that. Again, it does my last color. So there's kind of where the entry for this S&P 500 trade was. It's pushing down at this point. It's pretty much well over that 3-to-1. And again, how you guys would have gotten into this trade, this happened about 3-4 hours ago. This was a failure to go higher trade, right? We punched up. We had a decent candle. It dropped down. It gave us that white space. It pulled back. It had a failure to go above, and then boom, it collapsed and came right down to the 1-to-3 and then stabilized itself. So this one, I would say, it's poked down and buyers, and again, we'll drop it down a little bit lower to see it. You can see that buyers have stepped in and rescued this a few different times, and it's pushed back up again. It's kind of consolidating because we're in that lunch hour right now, but I would say, just looking at it, it appears that like it wants to come back a little bit lower. I would be a bit cautious with this green zone right here, and here's why. I'll zoom in just a little bit so you can see it. This candle right here created the zone, and that's why this is marked off in dark green. This dark green candle, again, pushed deep into the zone and drove about that deep. I don't know if you guys can see the difference between the bottom right here, right? It drove about, 95% of the way into the area. When that happens, it's typically a pretty good sign that there's probably not a whole lot of orders left there, right? Because think about it. It drove all the way to the brink, and buyers stepped in at the very last moment before it was broken. So how you can trade that? Well, if it comes down, looking to the left here, there's really not a whole lot of crazy movement in there. There's most likely a short. So what I'd be doing is I'd be using this as kind of a warning area, saying, hey, listen, let's see what happens. Could it hit here and bounce off? Short, absolutely could. But what I would be looking for is more kind of just like we had this Harry Potter trade set up here, another one that is taking over this area a bit lower. Okay. Now this could come in, any number of ways. But again, it would be a similar kind of a bounce through, a retrace on a pop. Again, it's a momentum break. It's a continuation pattern, guys, right? The momentum to the downside, we're in this kind of stabilization. It pulls back, pops the zone, and then again continues in its breakout to the downside. Is kind of what I'm looking for on this one. All right. So either way, this top level, is it good for one more? Maybe. It would depend what caused price to get up there and also what time. The reason why this was a decent setup, okay, for this morning is because this triggered right around the U.S. Open, right? We had kind of put that new high in at 3 o'clock. We pulled back. We kind of drove forward again. And then right around the 8, 9 o'clock time frame, when the market opened today, it is really what helped us drive that down. Now, why did it stop moving? Well, again, 10 o'clock, consumer confidence, it was kind of halted like that on. But again, one of the best times is when markets are opening to see that type of catalyst, right? It's just like news, and that's what helped us on this one. So go across the Dow. So the Dow actually had a zone in just slightly above, and it didn't get up there. I was waiting for it to go a bit higher. So, on a bigger picture, you guys can see the Dow is, spent a lot of time going sideways. And last week we had talked about this 2874. Now, it got close and kind of got pulled back a few times, and there was some buys off this bottom level, and it came up and stabilized. And, you guys can see here on the 4-hour, these two kind of teal zones are the one that we've been talking about, that have been around for, forever at this point, right? They are all the way from back here, February 24th to like February 26th is where that base came from. So as you can see, again, we got front run here. Look at this. It just literally rode along this zone. It was unable to break through. So it did pull back, and now it has literally been sucked right back into that same zone. You guys see it? It's been sucked right back into that same zone. So we're back down at that like 28,175 area. Looking at this on a technical basis, again, pretending I knew that it was not the Dow, I would have to say that this one also looks like it was going to continue to fall, right? there's some stabilization here, but there's not really much here. I would say this one looks negative for me, right? But over the coming days, a couple things that I'm looking at, right? Again, it's not at all-time highs, right? We're not at all-time highs like the other two indices are. So it is kind of pulling back. It's kind of got a zone in. It's one of those things. Let's see. It's marked off here, right? It's marked off kind of that same failure to go higher pattern. Probably willing to take this one if we can get back up there again. And that one is sitting approximately around 28,458. With as much movement as it's hit now, and again, it's turning where it should have turned. Got any more continued bearish pressure, I feel like this has the ability to come really kind of back down in this area here before it starts finding some buyers. Things this week that can really affect this. Durable goods is a little bit more sensitive to the Dow than it is the S&P and the NQ. Because you think about it, when you're talking about goods, you're talking about manufacturing, right? Industrial products. You don't typically consider goods as like tech services, right? So it is going to be affected a little bit more. If this number is bad, I feel like the Dow tomorrow will probably tumble the most. Okay. Areas again where we've seen buyers though is this 27,505. I think those are valid areas here to be able to kind of start looking for longs. But any type of basing, if we get some solid basing sideways and a pull down, that could also be a great little short entry for later on this afternoon. Okay. So those are the three indices there. Let's jump across into currencies pretty quickly. So here's the Aussie dollar. We talked about this last week. Again, Aussie, very, very high in the curve. Again, all this is about gold and recovery and growing and the need for inflation protection, and none of those things exist currently right now. So we've watched the Aussie kind of pull back. Now, we are in more of a consolidation area. And what I mean by that is, again, we had this zone that we had from last week, right? This one's been around for a while, but we've had this one, right? And this is where the high is, right? And now we have a lower high, and now we have a lower high, right? And if you flip it around, again, this is the same zone we talked about from before. Again, this has been around since the 14th, right? We have a low, we have the low here, a higher low, a higher low, a higher low, a little bit of a lower low, but again, it's starting to consolidate in. So we're seeing a coiling effect, okay? I would imagine that coiling effect will probably, it'll be something that we see a bunch of this week until, again, tomorrow morning with that first ADP number, and then Friday's non-farm payroll. I expect a big explosion out of this one. So on the lower time frame, right? On the lower time frame this morning, for the most part, we've had sideways movement. It did have a trade set up yesterday, kind of early in the morning, right? Let's see. Yesterday at 8 a.m. is where this one triggered to kind of touch this upper level that we had talked about before. And again, right now, it's basically sideways. In 24 hours, this one has moved a total of 1 pip in 24 hours because that's literally chopping back and forth. So, ways to play this one for later in the week. If you can get this one, if we can get it close to the top or bottom around any of the U.S. data sets, this could be a great little trade. Now, again, I'm going to put my pitch in every week until I get everything that we want. I'm still looking for those knockouts in the dollar CAD, and we'd like them in, Aussie dollar is not a bad pair. There's a couple other pairs that I'd like some knockouts in. This would be one of those ones. But, there's definitely, if we can get up to this upper range at 72.03, or even, again, this is a bit more aggressive, but even over here around the 71.95, say by tomorrow morning at 8:30 for durable goods, I would probably look across over into, say, the 2-hour binaries, guys. There's probably some good setups. And again, one of my students today got a 2-hour binary off of, I think, this one, although it may have been the euro. I forget which one she posted. But again, not a bad area. Same thing at the bottom. If we can rally back down, and again, I'll remove this 3-to-1 right now. We don't need it. I'll leave the zone there, but we don't need the 3-to-1. Let's see. I'll put this tag. We'll put this tag down here. 71.48 to the downside would also be an area where, again, any U.S.-based news, I'd be looking to pop off of that one. Tonight's construction work done, probably not as much. But if we can just continue to go sideways, be in that upper range, 72.03, 71.95, or 71.48. Again, drop down to the shorter duration binaries, not the fives. The fives will be too quick for the news, but drop down to the 2 hours, and that's where kind of the sweet spot will be for the Aussie. Now, Aussie Yen. Aussie Yen kind of turned on us. It was like, I was holding on for 76.58. That number is an area where, again, the last time price was here. And again, we've talked about this one again. There's a short here, short here, a short here. We've had many, many shorts off that level so far. Whoops. Oh, I can't do that one if you guys can hear that noise. The 76.58 is what I would say probably kind of a golden area for us. Kind of the same idea, right? Kind of the same idea. It's a good place. It's hit there numerous times. You've had many setups off of that. I like it, but unfortunately, it's starting to front run. It's turning before we really get any type of movement. So kind of the same thing we talked about, the Aussie dollar. The Aussie yen is kind of the same scenario, right? Shorts up here at 67.58, longs down here at 57. I'm sorry, 75.47. Again, we've had those on, looking at a 4-hour just to kind of get back. You guys can see that's an area we've been kind of watching down here. Not that one, this one here and here. All right. So either of those two are good, especially that 76, 60 number. That's, look at this, down, 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 and again it's already starting to turn on us, but it's there again. All right. So jumping across the euro yen. Yeah, euro yen was also set up off a 4-hour. Whoops, not that. We had the zone up top. We were waiting for price to come back up to 126.38. It rolled on us again. It's like, just go, just go, just go. It ended up hitting this smaller turnaround area. It's dropping now, and I think at this point it's already, let's see, it's popping in there. Yeah, it's already popped. It's 1-to-3 risk to reward ratio at this point. I do like this one lower, and I feel like, again, this is a yen story. It's a little bit of a euro story, but I would say if anything else, this is a yen story. So one thing that I'm looking for, if you guys have a breakout scenario, like a breakdown strategy, right, that you use, and again, we've mentioned a couple on this channel, this is an area I'm actually looking for to overtake, right? Again, we've had some buyers step in, but I do feel that the way that this kind of really exploded forward, I do feel that there's a short target in here. And again, use your favorite kind of breakdown strategy as it collapses. You guys have heard me use, the red, green, reds, and kind of some stabilization, other techniques. But I do believe once we get a break, if we can get a bit of stabilization, that'll give us our risk level, and then take this for a short down to 125.07. I do like that one. On the hourly, like I said, we got turned here. I didn't know that it was going to turn. I was kind of hoping that it did break through. I mean, I was looking at an original zone formation of kind of this level right here. So I knew that it was in, but we were approaching that kind of a number of hits. So I was like, let's see if I can get a bit more conservative and take it up top. And we did make it there, unfortunately. So right now, I'm looking for targets down here at 125.07. I do think 124.37 is also an area we could get a decent bounce off of if we can get that low. But for the most part, again, on a daily level, you guys can see the ATR is more or less flatlined down here, about 90 pips. And we are extremely high on the curve, so I am still thinking bearish first, right? Got to go bearish first on any of these positions. Trying to bring this back down. So bearish bias, 125.07 is a downside target. Now, look at this movement. All right. So as I mentioned for my guys yesterday, I was looking for price to bounce around 138.22, and we ended up coming down, grabbing approximately around that level. Look at how this thing has moved, right? We've had highs, low, high, low, high area, low area, kind of a little bit of a bounce, right? Had some issues, came back into that low range, and then boom, skyrocketed higher. So, this is what it looks like between the two zones, and as you can see, we ended up bouncing right off that lower area. Now, we've just gone off this upper kind of 4-hour kind of quadrant, right? It did hit on the 4-hour. Again, I've drawn it. This is actually done on the hourly, but the 4-hour, it's just a bit lower. So it has triggered. I do like this one short. I do think we are in tune for a kind of a reversal on this one. This was way too much pound movement in too short of a period of time. And again, if you guys know the parabolic retracement strategy, it's kind of the same idea. When you get these large extended moves in a very short period of time, right? Again, the pop here, I mean, straight up, we got our base. It finally collapsed and boom, all the way back down again. Finally kind of stabilized itself, found some buyers. Again, boom, all the way back up again. Kind of the same thing we just talked about. I'm looking for an overtaking of the short side. Now, is it going to happen in one day? Probably not. It may take two. Maybe three. It depends on how much this wants to move. The last few days, it has had a very small ATR. Right now, you can see here, I mean, we've been down in the 90s. It's back up to 106 instantaneously because of this one day. So, look for a confirmation. Look for any type of level of basing. Again, we're kind of getting the red, green, red right now. I'd like to see, and again, this may be my entry on this one right here. Okay. I may look to do, here again, let me move. Let's see. If we can get a breakdown of this level here. And again, I'll move this aside. We'll talk about this here as what we're looking to overtake. put the risk to reward ratio on. And again, it's kind of laughable, but again, on the lower time frames, there is actually an order here. But yeah, I mean, there's a potential for something along this, like this. Let's change this to green. And there's a secondary target right here. Let's see, go in here, we'll go with a darker green, medium green. Sure, that works. Right, something along those lines. Now, again, this 1 to 5 target, I'd be a bit cautious. It's just a few pips shy of where I'd be looking for, a grander target. This was a nice push, sideways movement, and then bounce again. So, yeah, I'd be a bit cautious there. But again, this would be a Harry Potter to the downside, right? It pull through a retracement back up, use that new level of risk, and then continue it back to the downside. All right, pound dollar. So, pound dollar did not have the explosion forward. Again, it was a little bit more tempered because of the yen. The dollar versus kind of the yen at that time frame. Um, this one's a bit harder to kind of trade because we've had so much consolidation. Again, we had that kind of punch through and punch higher. It's really kind of the same. Drop it down one hourly. It's really kind of the same thing, right? We're looking for really levels. Take this off. Let's bring this over here, right down here, and that one's going to be weird to grab, right? It's already over there, but it's right in there. Okay. For me, again, this is kind of that high on the curve level here. I'm worried about the stabilization that occurred here at 30.58, right? This kind of, this basing right along here. I like the top side. I think 132.41 is a great area. And again, this is on a 4-hour chart. I absolutely love, but the same thing, really, really fast up, retrace back again. And it went so fast, it retraced back up again, and then it retraced back again. So we're kind of trying to get back that direction, but I think, again, we need to be thinking probably more short than anything else. Just because, again, we are high on the curve. We've had a lot of movement. We've seen really explosions in both this as well as the pound yen. I feel like it's due for a bit more of a reversal, and unfortunately, this one didn't make it all the way back up top. I feel like we're going to be getting, again, I feel like this one's going to roll over and get back down into the 30.59. Now, ideally, I would love this to come back down and be in this kind of somewhere in here. I'd like for it to be in this range between the 30.59 and the 129.91. I would like to get long this before the core durable goods. I feel like no matter how good the core durable and just the regular durable good orders are, there's going to be such a negative spin on it because it's going to be less than what we were previously. I just feel like this one is going to pop up from it. Like, I just don't feel like there'll be dollar strength coming in from this. I feel like it'll be considered dollar weakness. So I would like to get long tomorrow morning. Now, this is definitely a pair that next week, again, you could trade with non-farm. Look for these 30-minute levels, right? Areas where we have big movement and basing, or they're at the top or at the bottom of any of these swings. This is a great pair to play with non-farm, okay? ADP number on Wednesday as well as the non-farm number on Friday. So either of those, again, this is really one that I've been kind of focusing on, smaller term. And then again, you guys can see this up, down, up, down, up, down, up, down. It hasn't given us major swings, but it's given us great movement for like half a day, like one day up, one day down, one day up, one day down, which is absolutely amazing to play, right? But had you done it like on Monday, right, the 17th, if you would have done it on the 14th, I guess last Monday, right, the 17th, until now, it's done nothing in a week, except provide one day up of 130 pips and the next day down 130 pips and then up 130 pips and then down 130 pips. But had you been holding this straight for a week, it's gotten nothing. So again, trader's pair, not an investor's pair, it's a trader's pair. Now, euro pound. So euro pound, again, we marked off this level, expecting some type of a rollover down. This one, there's not a lot of news this week for the euro or the pound, so it's going to be kind of slow. And again, I mentioned, hey, listen, it's probably going to grind down, and it did. It kind of ground at this level here. A little bit of a pop. It went a little bit lower, and it's grinding. So, I see this one coming down to 85.51. I think there's probably a long there, but depending on the day, at this point, it's probably going to hit probably Thursday, Friday. I wouldn't want to hold it over the weekend, so this one I'm kind of keeping on my radar for more of a kind of a Sunday night trade type scenario. Again, we mentioned if we were able to get up to this 90.23, we'd be looking to get short, and it did. It went just slightly above, and it's rolling back again. So I would have to say for the rest of the week, I feel, bearish about this pair, but at the same time, I don't necessarily have a great entry where I'm like, yo, I got to get in there. I love that one. That's great. There's nothing in this one really right now that's like beautiful for me to the downside. So again, I would say bearish, bearish, looking at 89.51 as a potential long. All right, so this euro position just got triggered a couple of hours ago. Actually, this is the one that my student got into. So we had talked about having two levels in this one yesterday morning, I guess. We had one level here where, again, this is what I'm talking about. This is what you guys need to grab next week. A drop, a nice kind of level of stabilization, and a nice push off, right? A long body candle. And it came up and grabbed it. And again, it hit pretty well. It kind of formed its new level with my, with my indicator. And all it does is I hand drew the yellow. It drew it based off of, it drew its own red. And that's what it triggered. And again, it's hit the 1 to 3, kind of bounced around in here twice. This is actually the upper range one here. Let me bring this down to the lower one here so you guys can see it right there. But again, we've hit 1 to 3 here, triggered again, came back down. So it's actually provided two different opportunities today in this pair. I do think that this one does, it does want to come a bit lower. I do think we will start kind of testing the stabilization down here around 117, like 85 to 90-ish range. The way to play Euro right now is, again, to time this one with European Open, US-based news, and US-based Open, okay? I don't think tomorrow, again, durable goods will also move this pair. Thursday morning will probably be the big mover, and unfortunately, it's a little bit too early to kind of diagnose what we're going to do on Thursday. But the secret to this one has been really finding these levels on the 30-minute time frame. Okay, if you guys are not looking at the 30 minutes, you guys are missing out. So find your 30-minute time frames, and that's where we're able to get our opportunities. And again, this one right here, right? We triggered this and let me give an example of why I'm telling you to 30 minutes. This was like 9 o'clock in the morning. 9, 10 o'clock is when this one kicked in. This was a 28 pip move, okay? I ask this question all the time, but for the people on the channel, what is the strike differential on a 2-hour binary from 8 to 10 in the euro dollar? Okay? You guys will wonder why I'm telling you, people are always like, well, I don't trade currencies. It's like, you're missing out, okay? If you don't feel that there's opportunity here, go look to see what a 2-hour 8 to 10 or 9 to 11 euro dollar binary strike differential is, right? Take that, divide that by 28, and you tell me how many strike prices that jump down in that time frame. Okay, it's quite a large amount, guys, and this is why you can take very, very small. Again, predefined risk, right? Nadex, whatever whatever it costs you, including fees to get into the contract, is what you pay for your risk, right? You can't. There's never any more. And look at the movement, right? This one right here, 2 hours, 28 pips up. As of 9 o'clock down, in 2 hours, 28 pips to the downside. Do the multiplication. This is why we get so excited about these early morning trades. And then, bam, you're done for the day, right? Dollar CAD. So dollar CAD, again, on a daily, this one is just grinding lower and lower and lower. This is kind of what we have. So we had one area that we had as an area of interest that we were looking for. Now, it blew through that one. As you can see, it's now pausing and kind of stopping on this one. This one has basically been sideways. Here was a trade from last week as well. Kind of came up. It opened in that zone and was a great little short. I'll delete it now so we can kind of clean the chart up. We are really kind of wedged in between this level and this level. And as you can see, I mean, here's our top side, right? Top, bottom, top, kind of bottom, right? Top, bottom, top. So I would have to say, I would assume that this one is going to continue to push a bit lower. It looks like it wants to stabilize, but then push lower, from this bounce. Areas where the top of this channel is 132.36. Bottom side is, approximately 131.42. Now, this is quite a large range for this pair. It's about a 90 pip range. There is actually a lot of Canadian data this week, as well as a fair amount of USD based data. So again, could this continue to chop back and forth? Absolutely. For me, I'm looking for kind of short-term longs at 131.42. And again, if we approach this upper level at 32.36, yeah, I'm all into that one. And again, 4-hour wise, you can see the same thing, right? Pop up, stabilize, drop, grab it, came up, stabilize, drop, grab it, popped up in one candle, stabilize, and we're dropping again. So again, it's been a great kind of channeling sideways. Now, for things next week, again, I can't predict where we're going to be in 7 days, but if we're able to finally break through the bottom side of this channel, this 31.42, if price is able to get down to the 30.67 before the ADP numbers on Wednesday in the non-farm, I am going to probably be looking at, again, a little bit farther out of the money binaries, or probably binaries, probably not call spreads. I'll probably look at binaries because, again, we get some nice movement. Even with just a whipsaw back and forth, we can move some strike prices. And what I'll probably do is use an out of the money, a couple of them out, get something in the probably like the 15 range for risk, approximately 15. And if price can just spike because of volatility back and forth, and if price can come right to that binary where it's like for $50, I'll risk 15 to take 50 all day long. I'm cool with that, right? I'll take it off early to make sure we don't have continued whipsaw and ends up getting out at a negative. But those are definitely trades I like to do with those bigger releases, particularly in the dollar CAD, because it tends not to have as much premium baked in. Now, the dollar CAD does have a little bit different of a strike differential, so just keep that in mind as well. Okay. Now, dollar Swiss. All right, so dollar Swiss, kind of the same thing. And right now, what's happening? We're talking about, in the news in the last 24 hours, it's been a lot of stuff about TikTok, right? And I mentioned in the beginning, and again, you can, Forex Factor, any of these releases, you hear, anything that happens, you see an ad, it's U.S. dollar, again, I guess the latest that we saw 10 hours ago was the U.S. and China agreed to ensure, they agreed to ensure success in partial trade deal, right? You're talking about it here, and again, you see some Chinese up here, but what do we hear? We hear TikTok, right? TikTok, TikTok, TikTok. They're suing each other, and again, that is what has given us strength back in the Swiss again. Okay, the Swiss economic meter this week, I think, will be pretty interesting because we don't really see it too often. For me, I'm still holding firm with my top and bottom. Again, this is all consolidation. There's been small trades, but consolidation. So 91.52, I like shorts. 90.65, I like longs in this one. All right, either of those two areas. I do like how it is grinding down. It would be cool if we got down here and then all of a sudden we get some good U.S. news, some type of economic release, and then boom, a little bit of a pop up. I think that could be in order for this pair as well. All right, now pound yen. Pound yen finally tagged that level. Okay, so we had the same level of basing, and again, this is a perfect example for those of you that are new that again is not familiar with Harry Potter. Here's that same type of stabilization level, right? We came down, we grabbed the top, we grabbed the bottom, we grabbed the top, we grabbed the bottom, we grabbed the top. And what happened? We finally broke through the top. And again, we went to an area higher that we expected the shorts to come in right around here, the 106.08. It hit that level and came down. But what did it just do? So if I extend this yellow across, what did we just have here? And I guess we can do it over here. There was that prior level. What did it do? Yeah. What did it do? It popped above. It retraced, it grabbed the level, and then took off. Okay? So it basically gave us our Harry Potter entry, and then some. Right? So again, this is why it's important. Levels will not last forever, but again, how many times did you want this to hit? Right? We stabilize, short, short. Number 3 is the one that finally broke, right? And it pulled back, went above, and then the old selling became new buying, broke above, Harry Potter, lightning bolt back, grabbed those orders, and boom, went all the way back up and touched this 30 minutes. So where we are now, again, this is a rather high. We are a bit higher in the curve. If you look to the left, you can see we got a whole lot of kind of levels of basing, right? We had this big drop and kind of consolidation sideways, that little sawtooth, and then boom, it collapsed through the bottom. So again, nice little area in here. I would expect some type of reversal in this one. It's reached back down again. I don't really have a good entry on this one. I wish I did. Like I said, it did bounce off this little 30-minute level, but this one at this point is pretty much over with. Again, very minor, small level. You guys can see right there. It's already hit its 1 to 3 for the morning. I haven't been as much of a fan of the pound yen lately. I just feel like there's been much better opportunity, and this one just hasn't been moving as much. This one will kind of obviously move next week as well with the ADP number on Wednesday, non-farm. But it is what it is. It hasn't been my favorite one to trade. And again, easy trades like this for a Harry Potter that occurred, yesterday. Lovely, great, took it, and after that, it's just kind of like, we'll see what happens next. Looking at it on a technical level, I would say that it looks and appears like it wants to roll over and head back to the downside. Okay. I see some questions. I'll pull that up and try to look. I have no audio anywhere else. You should have it. Yeah, try refreshing the browser. Yep. Ross, yeah, you see 4 pips on this one all the time, right? You get 4 pips on this all the time. All right, so let's go across and let's go to everybody's favorite shiny metal, right? Look at this. What's happening? Why is gold going down, right? Gold is a hedge for inflation. What the heck is this? Did somebody not tell gold that it's supposed to be at all-time highs? What's going on? I joke, guys, but it's something I've been talking about. I mean, yes, Gold is here, but we mentioned before that, like, listen, without that inflation story, again, this was, oh my God, stimulus. We're going to print money left and right. Woo! Inflation hedge. And this is not what we've seen, right? Inflation is not here. So it's great. But when everybody and their brother starts talking about inflation, you got to buy gold as the best asset, ever, right? That's what gave us this big drop back down again. So, we had areas in here and we talked about these areas about, we were looking for kind of, high and low, right? Not, 1988 was areas where we were looking to get short, right? 1916 was areas where we were looking to get long, and we did. We drove into the zone about 60% of the way through. So it's a zone. Again, it's a tested zone, so it's one that I would be a bit more cautious with. Now, I'm going to put the overlay on so you guys can see here is where the actual zone is listed as being, okay? And you can see what the response to it was. It didn't have an immediate burst, right? But again, it's hitting and it's kind of bouncing back and forth on the top. So there are some buyers here, right? There are some buyers. And again, we saw buyers step into the area, into this demand area here. So what I would expect is, again, we're in lunch right now. I expect this to go a bit sideways. We kind of need some go juice for this one to start going higher, right? In the form of a tweet, something from Powell, some type of economic release, something on inflation, Warren Buffett saying, I need to buy a whole heck of a lot more gold because it's going to 5,000, something like that. You need somebody this needs to be manipulated because the reality is right now, we are not seeing inflationary factors come in. So again, gold is a speculation market. You're in and out. You're not holding this long term, right? And again, you talk to an advisor, they're going to tell you that you should have a very minor part of your portfolio, right, in gold. Back in here, they're like, oh yeah, don't forget, guys, 5% of your portfolio needs to be gold. Look at how great it's been this year. And then since people have bought it, what has it done? It's done the traditional, listen to an advisor, put it in your portfolio because you gotta have it, and then it's come back to the downside. So, but in a trader sense, again, it's been bouncing back and forth. It's been stabilizing. I would expect this one to go a bit lower, and again, once we get that nice kind of burst higher, there'll be something kind of nice in that area, right? This should be over here more or less. All right. Yeah, I mean, I would say this 1938 is probably a decent short, and if we can get some type of a pop up to 1964, the way that this one kind of went down and the way that it was front run, this will be an area that I'm looking to get short as well. So keep that on your radar. 1963ish, if we can finally get a bounce. But again, I wouldn't be surprised if we just grind through this level, eat up all the buyers, and then slowly start to push. All right, silver. Uh-oh, what happened with silver? So silver, guys, we had this kind of level. It did give us kind of a bit of an entry, but unfortunately not the one we wanted, right? It ended up going all the way to the profit target before pulling back, and then kind of came back through the top, and it did the same thing. It went all the way to the profit target again, then finally pulled back and then gave us the entry, right? So kind of those ones, not the ideal kind of Harry Potter situation. And even when you consider it across, you can see that it kept pulling back into that same level. Here's where it actually was, right? Put the box on you. Once it reestablished the new level, here was kind of the top, right? And you can see it popped again, popped again, popped again, and kind of pushed and popped. So right now on this one, I'm going to delete this so we have, can clean some space up on the charts. Again, try to keep it moving as best as we can. Drop back out to a 30 minutes. So this is a level that we had talked about before, and we were looking for this more for short purposes, right? This was an old level. We have basing. We had buyer step in, buyer step in, buyer step in. So it's not one of those levels that, I don't think this will be an instantaneous burst through. It actually may hit this zone and take a bit of a bounce. And again, that would also coincide with what we see in gold, that little hit and little jump. But I'm kind of waiting on this one. I want to see. I am not really a big kind of believer in silver. The reason why is because people go to gold for inflation. People see silver and they say, oh, it's another metal. But it's not the same type of metal that gold is. It's not associated with the same things. So yes, it kind of got drug up with a proxy, but I just don't feel that it's that. And again, you're more than welcome to disagree with me. I just don't feel like it was as good as an investment. Not yet. Not yet as far as something that we're willing to trade. Eventually, yeah. I mean, when the economy is really kicked in and a lot of the indecision is out of the market, we're just not there yet, right? You guys ever heard about being, the first one in the party or being the last one in the party? I feel like we're still trying to be the first in this one. So I do feel there's a short here, a break below 25.64. I think is a good area. All right. And again, looking for that to come down to approximately 24.50-ish area. All right. So let me pull across. I'm going to bring this bad boy in here. Again, this is over on TradingView. I don't subscribe to TradingView, but I use it because it maintains things and I can get a good oil rating. So we were talking about this level up here last week, right? 42.82, and you can see, I mean, how many times, I'll bring this back up to an hourly, clean it up a little bit. You guys can see that this was the level we drew, and this is way back on like the 11th, right? Like 2 weeks ago. We've hit it, we've gone down, we've hit it, we've gone down, we've hit it, we've gone, got it in again, dropped, and dropped. Last week we talked about we wanted oil to be down here so we could get long before news. Well, guess what? It ended up just kind of basing and going sideways. And look, we were looking to get long here for a pop, but what happened? Here's where the news release was, and bam, we got the pop. It just didn't go in the overnight down where we wanted, right? Then we ended up rolling out of that same short area again. We came back down again, and what happened? All the way down, all the way back up again. Talk about an amazing parabolic retracement trade on this one, right? An instantaneous, like down, and then we retraced it almost instantaneously, right? Back up into the same level we were looking for shorts, okay? Again, this is why it's so important to know when we have news. We ended up kind of coming around, going just a bit lower, no problem. And now we've kind of stabilized. We've hit it again. Again, from that same level here, you can see we went right back down. Now, today, we have finally burst through the top, okay? Interestingly enough, it did give us kind of a Harry Potter, although I would be a little bit more leery on this one. So I'm going to bring this back up to an hourly and kind of look back and see what is it that we're hitting. So we know, and again, I'll move this red. I'm cool to move this red now. We know that we spiked up to 43.50 today, right? So looking back, we can see that that's just slightly higher from where we hit before. And then it's been some time since we've been here. All right, so let's pull this back on and go to a daily. And we can see, where is it? We lost it all. Let's see, pull this here. All the way across, all the way down. All right, so you know what? I'm going to pull a horizontal line. Horizontal line. Right there. So now that price has touched this level and gone slightly above where we were before, we need to go way back, right? Way back shows us that there's not a lot there, right? Dropping down to a 4-hour, and again, let's go way back. Let's ride this all the way across to where we can hit that data at. Ooh, man, are we going to have enough? Right there. So we can see that we do have a little bit of a hiccup here, but still nothing great. So again, this is leading me to believe that this is kind of set up for more of a, again, let's see if I can drop down a little bit lower and get kind of a, yeah, let's see. I don't know if I'm going to be able to go far enough back. Yep, I can see it. Let's see here. Ooh, so that dials it in a little bit more, right? So it looks like we got some, again, not the best. I wonder if we can do, will we be able to do this? Let's see. Yep, looks like we can. All right, so this is not the best of levels to draw off of. But, again, we could, there is a debate on this one. There is a level kind of sitting in here. So maybe this will be our new high that we're looking for. Again, nothing in here I would say is great. It's just kind of ground higher, a little bit of a pullback. Nothing super, super clean until like the 48 range. 48, there's definitely better trades in there. But we got some, I said, we got some time to go. So let's bring this across real quick. That's where we're kind of approaching right now. Okay. So again, larger area, what I would do in this one is I'd be looking for kind of a failure to go higher. Let's look for a pop. Let's look for a stabilization. So tomorrow in the overnight, this one will be pretty important. Look for price to go higher, pull back, and then we'll see where we are about 30 minutes before news. Remember, the oil inventory report is tomorrow morning at 10:30 a.m. Eastern Standard Time. See if we can get a clean level of basing on this one. Again, I would drop it down to probably a 30-minute. Look for a clean level, whether top or bottom. I wouldn't really use. There's a little bit of a zone here, right? But I would look for the freshest levels that we can get. So go to a 30-minute. Again, you may be able to use this 43.55. I think 43.71 would be a better area. And again, for me personally, I don't think I would trade this one futures because it's not the cleanest of levels. It's not like what we had here. I would probably shoot down into a binary to be able to trade the oil inventory report. Okay. Tomorrow, actually, as well, I brought it up there. You can see we don't have the actual number yet for it. Where is it? Right here. It's supposed to be 3.4. Again, I think this one would be a little bit closer. I don't think this one is going to be as much of a market mover, but it could be. Also, remember, as we get to September, gas prices is changing from summer pricing to fall pricing, which will also affect this number a bit as well. I know where I live, it just dropped about 20, 25 cents in the last week as far as gas prices went. And again, it's not like oil pricing here has justified that move. We're still in the same area. It's summer to fall gas. All right. All right, guys. So that is it for today's analysis. Like I said, next week, we are not here. Go ahead and mark your calendars for September 8th. That's the next time that we will be on. Good trading. Remember, guys, in the current market environment we have late in August, what we should be doing is looking on 30-minute zones, look for levels of basing and nice pushes off large extended body candles. That's the way to play these things, particularly around European Open, US Open, US News, and then especially at 9:30 at night for that Australian news. All right. So you guys take care, and I will catch you guys in 2 weeks. Take care.